Hello and welcome to the Be Formless Flow Driven as CEO / VC podcast. Today I am welcoming to the show Omar Ali. Welcome to the show, Omar.
Hi, B. Thank you for having me on the show. It's a pleasure to be here.
Thank you. This has been quite the journey for you and I, hasn't it? I think we met back in September of last year. I feel like it was September. It could be later than that, but it was around that time. We're
No,
finally.
that is correct. It was in September of last year, and I know that we've been trying to get this on the calendar for quite some time. So here we are. It's great to make it happen.
Yeah, and then we've had a few glitches just now with the platform, but that's okay. We're here. So thank you so much for joining all the way from the San Diego area of California. And it's such a pleasure to have you here today, Omar, because you've got a lot to share with us and been having quite the conversation around female leaders and startups. And
Yes.
you're going to talk a lot about that today as well. But before we jump into that, let me introduce you. You're the managing partner and fund CFO at Astia Fund, which is part of Astia. It's a global organization investing in high growth startups, predominantly with women leaders. You bring over 20 plus years across venture, private equity, and executive roles, and you've served on multiple boards and as a board observer. Prior to and alongside Astia, Omar, you've also been a founding lead partner at investment platforms focused on scaling tech-enabled companies, and obviously your background is in private equity. You've also served, I think I mentioned you've served on multiple boards. I did say that. Forgive me. We had a public holiday yesterday and my
Yeah.
brain is still catching up on a Tuesday morning. And the differentiation with the Astia Fund is Astia Expert Sift. And I know you're going to share a bit about this as well, but essentially it's a deal sourcing mechanism, a
Right.
learning community. And you've got over, you said now, last year when we caught up in September, you had 5,000 advisors and you've grown to 1,000, which is amazing. C-level, execs, industry expert matters, and it's built on Salesforce, but I'll let you explain all of that.
Mhm.
But then most importantly, when you booked in for the pod and I asked you what's one unique insight or lived experience you want to share when it comes to life, leadership, business, and or investing, you made
Yeah.
me giggle because you said, have fun. Life is too short not to enjoy it. And I was just saying to you pre-show, it feels like we really need to remember that right now, given the state of everything. We've got, crazy heat waves here. You've got crazy snow situations. We've got geopolitical, everything happening in the world. We do need to remember to have fun. Life is too short, too short. So tell us a bit about your journey and tell us a bit about, what you're doing and what you're continuing to build with Astia Fund.
Sure. Absolutely. So I'll start with my journey. I have what I would call a somewhat traditional background in the world of corporate finance. When I graduated from undergrad over 26 years ago, now 28 years ago, I was fortunate enough to get into the world of investment banking. And I worked for Rothschild as an analyst. And I did what most of my bullpen mates, as we were called, did during the analyst program, which was apply for MBA programs. So I was fortunate enough to get into a very strong MBA program, Bocconi, which is in Milan, Italy. My intention was to live and work in Italy for the rest of my life. I'm half Italian. My mother's from Napoli, and I have a lot of family members over in Italy. So that was the romance back in the early 2000s that I would be staying in Italy for a long period of time. After graduating from Bocconi, I moved back to the United States instead of staying in Italy, and I joined EMP Global. They were a pioneer in emerging markets private equity investing. They managed over $6 billion worth of funds. AIG was the anchor LP in all of their funds. And that set me out to the Middle East. So I'm half Italian, half Pakistani. That's my origin. I'm a very eclectic mix,
You
or a
are.
mutt. Whatever you want to call me, I'm a complete mutt. Let's put it that way. And I got sent out to the Middle East because EMP said, "Well, you sound as if you could speak Arabic," which I don't, "and we need somebody in our fund in the Middle East." So they sent me out there, and it turned out to be, a life-changing experience and financially rewarding, to be honest with you. So I went out to the Middle East. I was in Bahrain from 2003 through 2004, then left Bahrain and joined Istithmar, which was a $12 billion fund slash sovereign wealth fund. My business partner at EMP Global, and I left to form the industrial vertical at Istithmar. And we did traditional MBOs and LBOs of companies in the business services and industrial services arena. And I was traveling quite a bit, right? But I was in Dubai between 2004 and 2010. And, that was the go-go days of Dubai, if one recalls, right? And it just was a really good experience. And from there, I transitioned in 2010 to do my own investing. And then in 2015, I started doing angel slash venture investing. While I was doing that, I got to meet Sharon Vosmick, the CEO of Astia, and when we moved back to the United States, between 2010 and 2015, we were in London. And then we moved back to the United States in 2015. Sharon and I reconnected. And fast forward, Astia had started investing, doing direct deals. So on a deal by deal basis through SPVs, always in female led businesses. And in 2020, it had the opportunity to launch its first fund. And MasterCard is the anchor of Fund One, the main LP there. Fund One is a $35 million fund, and the total AUM of Astia today is $65 million.
Wow.
So, yeah, and the whole thesis, as you rightfully stated, B, is we're focused on inclusive teams with a woman of equity and influence in the company. That's really the criteria. We're
Mm.
focused on Series A and B companies. That's our point of entry. We'll take a look at seed stage businesses that are really far along in their commercialization and they have real revenue traction. And then, in terms of how Astia looks at sectors, we're quite agnostic, but we've bucketed the universe of sectors that we look at into health, climate, and prosperity.
Yeah, right. Well, so much to unpack here. First of all, did you learn how to speak Arabic in the end when you lived
No, I did
overseas?
not learn how to speak Arabic. I should have learned a few more words when I lived in the Middle East, but I did not.
I was curious when you were talking. I was like, oh, I wonder if he actually learnt another language. But I'm sure you worked through it. You've had quite the career journey and amazingly successful. Congratulations. Tell us a little bit about women leaders and I guess your criteria there.
Sure.
Why women leaders? I mean, I'm having quite the conversation, like I said at the start, with regards to a lot of people in VC. And, I see it beyond just VC. I see it as a woman myself, in startup, and there's still quite a gap, or there's a big gap between, diversity, if you like. And yet there's a number of talented women out there who are, really trailblazing and have these amazing business ideas, but
Right.
they tend to don't, quite often you're not supported, or, you're not, what's the word? You don't have as much of the male gusto at times as you need. And so I'd be curious to understand why that criteria and what you're seeing as the big gaps currently.
Sure. Well, let's just start with the headline numbers. I mean, the amount of funding that goes into female led businesses is appalling, right? If you read the latest statistics, less than 2% of venture capital went into female led businesses. And for me, while I'm not a female, I am a minority, right? And I feel that the data speaks for itself when you see in the context of US startups and businesses, a lot of minorities have chips on their shoulders and want to outperform, right? It's just that hustle mentality, that
Yes,
hunger mentality,
mm,
right? They just are already in a position where they need to just prove themselves. So I see the same type of dynamic with the entrepreneurs that we have in our portfolio. So we're investing out of Fund One, as I mentioned. We have 11 active portfolio companies, and they all have that same hunger and drive, right, that I just described. But in addition to that, what I've noticed, and this is obviously just based on my own sample set of data, is that they're really good stewards of capital. They make their dollar go a lot further along than their counterparts, if you will, right? And that's because they've always had to work with less capital. So they're just scrappy about it. And if you look at those two drivers, to me, it speaks to the potential for outsized returns. And that's ultimately what we're here for as fund managers, is to really get those returns.
So would you say that's more, and like, and I'm not separating, women and men, but would you say it's more that, like it's a different form of hustle, right? Like in terms of it's more strategic, it's more like they've got to work harder. Like, I guess what I'm trying to pull apart here is you talked about this, old world of hustle and, kind of whatever it takes. And don't get me wrong, there's still women out there like that. But I think about it now and I'm like, there's a different way to approach, success and, business and having that, empathy, the consciousness as well. Like, are you seeing that shining through? Like,
Definitely,
you
definitely.
called
I
out.
think our portfolio, on the face of it and as a whole, really is impact driven. Okay.
Mm,
It's not that we're an impact fund because we're not. I mean, we're really focused on serving this unmet need, which is just getting more capital into women led businesses and inclusive teams. Okay. But I feel that throughout our portfolio, each one of the entrepreneurs and every single one of our portfolio companies has a female CEO, founder. They really are focused on the impact, making a difference in the world, right? And I
yeah.
think that's hugely important here because you can do good and still produce a phenomenal business. And that's what we're searching for.
Yeah, and I love that you can still do good, but actually produce a really phenomenal business. Tell us a little bit about, you called out the sectors that you play across, and you called out one that was prosperity.
Right. And so when we think of prosperity, you can think of fintech as an example. We have a great company in our portfolio called Goal Setter. It's a financial literacy app that's really focused on the ed tech market. And it's about getting underserved populations in the United States, black and brown kids, if you will, more educated on financial literacy. So they already understand what it means before they get to college about saving and producing returns from themselves. And we've seen a lot of traction not only in the ed tech space for an app like Goalsetter, but also we're seeing it at the college level. Now, Goalsetter is becoming a tool that many college sports teams want to give to their athletes so they're prepared for life in the real world. And so, that's how we think of prosperity. That's an example.
I love it. I love the language you use and the modernity that your fund. Well, no, sorry, Astia Fund has like when it comes to women and future proofing. I guess VC in a way that's very different to how it's always been kind of seen. Like, because you think about VC, and when I first started engaging in talking to people like yourself, I was a little bit nervous, to be honest, because I was like,
Mhm.
oh, kind of like, why would they want to talk to me, sort of thing. Kind of, it's like the movies, right? Or what you read. It's never exactly all of that. And then here you are, you're focused on women leaders, in high growth startups and based on what you talked about. But then you're using language of like prosperity and really refreshing and very modern. Has that always been the case with Astia Fund, or like how? Yeah.
I would say so. I'd say we've always really been intentional about the words we use. They have a huge weight and meaning, and we think it's important to find the right words in our communication, whether it's messaging on our website or just when we're speaking to existing LPs in our fund or prospective investee companies. It's hugely important. So I think we spend a lot of time actually finding the right message. And it also speaks to us as an organization. One of the things that you had highlighted in the introduction was the Astia Expert Sift, which
Yeah.
for me is truly our golden egg, if you will, right? So we've got this wisdom of the crowd deal sourcing mechanism that, again, was built super intentionally. Right. So coming back to your question about have you always thought this way? I would say yes, the organization has always been really intentional. So we didn't just create this expert sift so we could find deals, source deals, sift through deals, and then try to execute on deals. It's really about trying to remove bias from the equation because the whole sift has been set up in a way where at the various touch points, really, we are doing things super uniquely. First of all, when the companies submit for investment dollars, it goes to our community of advisors, and the advisors get a notification saying XYZ company is applied. Please go and review them on the SIFT. And that's only the case if they have that industry expertise or not. what happens is, the advisors go on, there are multiple choice questions, same questions for each single company. There's text where they can write their input as well, in addition to answering the multiple choice questions. And all of that feedback is shared with entrepreneurs, right? And if you probably think about your own journey with the venture capital landscape, you would probably note that a lot of venture capital firms don't actually even give feedback to um, potential investee companies. Whereas we pride ourselves on giving this feedback, and it really is valuable for the entrepreneurs. They love it. They say thank you, and now I know where I stand, or and now I
Yeah.
know where I need to make changes and pivot. And we've often had entrepreneurs reapply on 2 or 3 occasions, right? And so we have a live example in our fund portfolio. We have a company called Airless Bio, where we came in at the Series A round. They had applied for funding in the seed round. They made it down to one of our levels called the operations screen. They presented well, but it was still too early stage. And we gave this feedback to the entrepreneur. Um, and then she incorporated it. And then a year later, she reapplied, and now it's a portfolio company of ours.
I love it because it's an ecosystem that you've created that is continuous. Like, like I think about even my own methodology, you learn, unlearn, relearn. You learn, like, understand what's not working, remove it, but based on the feedback, you go back and reimagine and create it. Then you test it out again. And do you know what I mean? You're giving this feedback, and it's two-way, so that there's this ability not just to fail fast, but also to evolve, so that everyone deserves a second chance, right? In terms of
Right.
the ability to see if they have what it takes. And I think that comes back to also then understanding if the founder, if the business is resilient enough to be able to take the feedback on board and then go, all right, well, this is what we need to do strategically to be able to, do you know what I mean? Like, I think that it's really,
I mean, not every founder takes it well, right? There are certain founders that don't take it well. And I think we also use that as a data point to understand if this is something that we want to pursue in the future or not, right? Because, you know, I'm not saying that you should always have composure in dealing with hard truths in life, because nobody likes to get bad news, in my opinion, right?
yeah,
But it does matter when you're dealing with business, one. And I think if you're getting good, valuable feedback, it's better to try to see if you can incorporate it. Or if you don't believe that's correct, well, then I think it's upon you to come back and say, hey, listen, this is actually what's happening. And this is why all those points have been addressed. So, I mean, we feel like the platform really enables that type of dialogue to happen, which has been great for us.
yeah, it's incredible. Well, tell me a little bit about, I guess just the state of play. I mean, the time is ripe for entrepreneurs and startups as we speak. Like, it's probably never been riper, and you may agree, you may not disagree. What are you seeing as the big trends, or the big, I guess opportunities and challenges for entrepreneurs and startups at this point in time?
Sure.
Economically, politically, it's not necessarily easy, but it's also, you get told that in times like this, that if you can survive through this, your business will do really well. As like, do you know what I mean? Like, I guess I'm just, wanting to understand your perspective on the state of play in startup world.
Yeah, I'm not going to mince words. I feel that it is a challenging environment right now. If you're not a .ai company,
Yeah.
and you haven't already received traction as an AI business, or you're not a venture capitalist turned entrepreneur, or somebody who's been there, done that, it's not a straightforward fundraising environment for traditional venture backed businesses. So, right or wrong, the AI landscape has just dominated the headlines, and it's really dominated a lot of the mind share with VCs. So, enormous amount of dollars that's been put into that. And I do feel that we're living in a time which is truly transformational, and there will be some big winners, and there will be a lot of losers from this AI bubble that we're entering into right now. That is for certain. But I think it makes it challenging for the more traditional businesses to raise capital in that type of environment, right? So what I am seeing is necessary is that the companies that apply to us, they really have to understand their product market fit. They really have to have a proven commercialization strategy where the revenue model makes sense, it's scalable. And I also think it's important for entrepreneurs to be realistic about valuation. And when you look back at the past 6 years, and there was a period where valuations were through the roof for early stage businesses. And it didn't matter if it was a female led business or a male led business. Female led business definitely were undervalued versus their male counterparts based on our data. But I think what's important is that in today's market environment, you're realistic about you being an entrepreneur. You're realistic about your value, right? And the most important thing is about creating a successful business and bringing good investors that can be supportive to you.
Yeah. Coming back to that and women, do you look at, I mean, again, another conversation, like another question, and based on some of the conversations I've been having, I mean, the founder is the business is the founder, in my opinion, quite often, based on, they've come up with whether they're co-founders or not. Like, you talked about product market fit. How important is the actual founder versus the product market fit? Because I've had various conversations where it's that, I've spoken to VCs and investors, and it's more about the founder than it is about the product market fit, because it's knowing that the founder has what it takes. Or is that an old school mentality? And if we apply it to women, or do you
Yeah.
look at both and how the two interconnect together?
We look at both. Obviously, the founder is hugely important. When it's a single founder business, we have a lot of data points to understand what that means. Oftentimes, I would say that the board needs to be really involved and helpful, provided that the founder is amenable
Open.
to, right? And it's open to that type of not only feedback, but strategy work and then executing on it, right? So I think in the instances of where I've seen challenges with our single founder businesses, they're not incorporating what I just said. Okay. So from my lens, what we look at is obviously the founders are hugely important, but the product and the execution of uh, commercializing it is also very important
Yeah.
with the lens of understanding, hey, you know, founder of a business may not be the same person running the business 6, 7 years down the road, right? Or 8 years down the road. I have to be careful referencing 6, 7. So what I mean is, it's not a truism that, hey, this person will be running the business forever. So I think you also need to look for that, where you see humility from the founders, where they recognize, like, hey, you know what? I may be the right person to take it from A to C, but if we're taking it from C to Z, we need somebody else, right? So I think that's a key attribute that I personally look at when we're evaluating the the founding team. Is really the humility and their ability to just take on the right advice and execute on it.
Yeah, yeah, humility goes a long way, doesn't it? Tell
Yep.
me, what you called out women and the 2% stat, which is quite, profound and well, it's astounding, not profound, astounding. What about VC as a total ecosystem? How much do you think that has evolved over time, and coming back to even this AI era we're in? Are we going to see a huge shift in the VC ecosystem as well in terms of evolution? Like, what you guys feel like you're very much, trailblazing through the ecosystem of VC? Or do you
Yeah.
think that we've got a long way to go going back to this 2% percentage as well when it comes to the total ecosystem?
That's a great question. I feel what's happening in the VC landscape, and I can say this because of my private equity background, is that it's becoming more like the private equity universe. And what I mean by that is you have massive VC firms, and I don't need to mention their names, but they are essentially asset managers today, right? They're managing billions of dollars. And some have produced just outsized returns. So they deserve to get more LP commitment and raise more funds. But others have just been a safe haven, okay, which is very much what you see with the bulge bracket PE firms. And so, what I mean by that is, I do think the emerging manager landscape, especially for the single GPs, right, the one person VC firm, it's going to be challenging unless they can produce outsized returns, right? And one of the things that we're confident about at Astia is we've got this high conviction portfolio construction model where we're not really doing what I like to call the spray and pray model, which is prevalent in Silicon Valley, where you're investing like in 100 different companies and, roll the dice and hopefully one of them is going to be, your massive return on investment. We're adding value. I mean, Astia is more than just focusing on this underserved population. It's got a reputation of really rolling up its sleeve and going on the boards of these companies, helping strategically, helping not only with business development introductions, but also really making sure that the companies are positioned for longevity, right? Making sure that their capital stack is efficient and that they can take these businesses longer than just, a 6 month or 12-month runway.
I love it. I'm going to completely shake it up now, and I want to talk a little bit about having fun, and life is too short not to enjoy
Yeah.
it. Because
Yeah.
considering the ecosystem you're in, and considering that it is high stakes, and you're working with all these founders, and I know sometimes, like I said to you, I had a conversation with my mum last night, and it's like you'll never get on top of everything. I was talking about, I had a lot to get up, like to do, and it reminded me of fun also, like the world is serious, and we're also, from as a founder, and you'd say it all the time, and also in your own life that, we take things very seriously at times because we want to get that outcome, we want to get that result, and yet we sometimes forget about just the actual moment. I'd love you to share a little bit more, elaborate a bit more on your response to my question, because it wasn't anything to do with business. But it had so much to do with business, and it had so much to do with leadership, if that makes sense as well. So
Right.
tell us a little bit about that.
Yeah. For me, this is my personal opinion. It is very important to have fun in whatever you're doing, right? Because of what we just discussed. Life is super short. I think we all know that. And it's something where you should apply that as a leader and as even somebody who's on the board of a company as an investor. I think what I like to do from my leadership style, because I've led teams, I've led even businesses. And we had a portfolio company outside of Astia, which had over 600 employees, predominantly drivers, but we still had employees. And, there's a very successful experience for me from a investment standpoint, but also from just a managerial standpoint. And
Yeah.
I think it was successful because the philosophy was empower people, always empower people. People are going to make mistakes. And, this old adage of let a person fail once, but if they fail twice, then reprimand them. I think people will make the same mistakes multiple times, but it's about how you handle those mistakes as a leader. That's hugely important. And my philosophy, again, is to take the approach of a little bit of levity, bring lightheartedness into the table because they are human, they're going to make mistakes. But what is going to really have them perform, in my opinion, is that they feel like they have ownership, that they are part of something that goes beyond just their paycheck
Right.
and their
100%.
position in business. And they're having fun, right? Because if they're having fun, they're going to really be motivated to do it. They're going to be excited about coming in every day, right?
Yeah.
And so I like to take that approach even with our portfolio companies. I'd like to always be supportive to our entrepreneurs rather than be the person who's got the stick. I'm not, always a carrot
Yeah.
individual, but
Are you hitting your number?
right. Yeah, exactly. So, I mean, it's important that we focus on the numbers, obviously. Otherwise, it's going to make everything more challenging if that's not what we're focused on. But it's also how do we get these entrepreneurs to realize, hey, they're human and they need to enjoy this because if they're not enjoying it, they're not having fun, then I don't think the business is going to succeed. Right.
Yeah, I agree. I couldn't agree more. Like, the minute you stop having fun, or the minute you stop energetically feeling like you're like enjoying this, you know that
Yes.
something's not working. It's kind of like, knowing where your energy goes is, like, for me, so important, and the ability to get everyone engaged. Final couple of questions for
Sure.
you. What would be one hope in 2026 that you would like to see, in terms of in the space you're in, and coming back to women leaders, what would you like to see, I guess, a tangible change?
Sure. So for us, it's actually something that we can measure. We're raising Fund 2 at Astia. We'd like to get to our first close for Fund 2, right? We'd like to get large institutions at the table who are seriously interested in looking at Fund 2 and becoming potential LPs. I think that's something I haven't seen in the market right now is, these private wealth management platforms, very few of them have opened up their clients to businesses or funds like Astia, right? So I would like to see more dollars coming into not just the fund managers, i.e., us, but also into the portfolio companies. Because not only is the percentage of VC funding that goes to female entrepreneurs appalling, it's even worse when you look beyond the Series A and B rounds. So many of these female led businesses just struggle to get past the B round
Yeah.
because of everything we discussed earlier. More dollars, that's got to be tangible.
Yeah. I really love that you're, like, on that mission. I need to connect you with a couple of other,
Yeah,
men in this, like, I feel like there's almost like this like, I don't know what it is, but it's all these, like, of really successful men in VC that coming together and almost I'll get you all on a panel. Maybe I'll get you all on a
that'd be
panel,
great.
a
That'd be great.
podcast later in the year, and you can all share your observations. And then last but not least, if you had one piece of advice for any we'll bring it back to women again, any woman who is looking for funding or, in startup, what would it be?
I would say don't be afraid to fail. Okay. I think I have observed that many of the female entrepreneurs feel like they have to have a higher bar than their male counterparts because of the appalling numbers that we've just discussed, right? But I think they shouldn't feel afraid to fail and just try their best in the process. That's all you can really do, right?
Yeah.
I mean, there's so many factors in life that you can't control. So if you're putting your best foot forward and you're working hard to try to make it happen, don't be afraid to fail. And then the other piece of advice I would say is, hey, I think getting good boards and good corporate governance is really important. I've
Yeah.
observed that from our portfolio companies. And that's something that they should really value is really focus on having great corporate governance.
Yeah, great corporate governance and support, like,
Yeah.
I think that having your support crew, I'll call it a support crew around you, just so that and having that mix, not just all female, but having the male, like, support as well. I think it's really important. But someone like yourself, you have that empathy, but you have that action orientation, you have that, foresight when it comes to what's ahead, that commercial, just being able to have that, like, all round, if you like, support, I think is super important for a woman in particular because, at times, we question ourselves, we overthink, unlike men who sometimes just go, yeah, let's just do it, even though they have
Right.
no idea. And yet the woman might, but it's just one of those, yeah. So, Omar, thank you so much. How do we find out more about Astia? How do we find out more about you?
Sure. So, with respect to Astia, visit our website. It's www.astia.org. And then me, you can find me on LinkedIn. I'm not sure what my LinkedIn handle is, to be honest with you, but that's probably the only
I've got
social
it.
media.
It's all good.
You've got it. Perfect. So that's the only social media I'm on. I try to not spend time on social media, to be honest with you. But yes, definitely feel free to connect with me there. And I can also be reached via email at omar@astia.org. So by all means, I'm looking forward to your audience reaching out to me.
No, thank you. And I'm definitely going to set this panel podcast
I
up
think it's
later
a
in
great
the year.
idea.
Yeah, so
Yeah.
watch out, everybody. I think it'll be a great conversation to have. And just, yeah, thank you so much for your time. And I'm so glad that we've finally got to record, uh,
Yes.
however many months later. And I think last but not least, just, reminding everyone, it is like life is too short not to enjoy it. And having that ability to have a laugh and have some fun along the way, I think it's so important. So thank you for the reminder also, Omar, and wishing you a wonderful week ahead. Thank you. Thank you.